Good afternoon, everyone. My name is Brian Lantier. I'm a senior research analyst with Zacks Small Cap Research. And thank you for joining us again for one of our CFO chats. Today, we're joined by Dr. Daxue Wang, CFO of Lotus Technology. Lotus Technology trades on the Nasdaq under the symbol LOT. Lotus, for those who aren't aware, is an iconic brand in the automotive industry, been building cars for 70 plus years. And they've diversified recently outside of straight sports cars into more SUV, sedans, and additional powertrains, which I think is sort of the catalyst and the reason for our conversation today. The stock is currently trading today around $1.25, and I have a $1.80 target valuation on it. I think there's some really interesting catalysts coming up for Lotus, and I'm looking forward to having this conversation. So, with that, welcome and thank you for joining us, Dr. Wang.
Thank you, Brian.
So recently, last month, the company announced its Focus 2030, a new strategic plan for the company. I think one of the interesting things that I took away from that was the shift away from pure battery EVs and incorporating that what market demand has shown you that there's a demand for PHEVs and ICE vehicles. So maybe you could talk about what you've seen and what drove some of those decisions.
That's a very good question, Brian. So this flexible powertrain strategy is rooted in three market realities we have seen across the global markets today. The first, the pure electric penetration in luxury performance segment remains below 10% globally. And some performance car buyers consistently tell us they want the emotional connection, the wave sound, and the sustained track capabilities that combustion and also the hybrid powertrains can deliver. And secondly, the global markets are evolving at a different speed. Some countries or regions are advancing like rapidly on the full electrification, while the others are delaying combustion phase out and charging infrastructure build out. So a single technology path would leave half of our global customers underserved. And third, the customer use cases have split. The BEVs works perfectly for the daily commuting, but for the track days and also the long distance drivings, the customers, they want the range flexibility for hybrid and also the combustion engines. So the point out, this is not the strategy is not a step back from our full electrification strategy. It's a pragmatic customer-led transition that allows us to serve every enthusiastic and also in every market and for every use case.
That's a really good explanation. And I think it speaks to the fact that the company is willing to listen to feedback from both customers and the market itself. So that's an interesting approach. You've talked a little bit, and the company has talked about a long-term goal of achieving 30,000 units of annual sales for the company. That's a significant improvement from where you stand today. What sort of milestones should we be watching for to make sure that Lotus is still on track to achieve that goal?
Yeah. So actually, we have measurable like milestones to track our progress to this 30,000 units. And in 2026, you can watch for three near-term proof points. The first, the successful continental Europe launch of our Eletre X in the fourth quarter. And the second, the stable annual sales for the updated Emira sports car, especially in the United States. And also the third, the completion of our operational integration of the Lotus UK acquisition and driving our sequential operational cost improvements. And for the 2027 and 2028, Eletre X starts to deliver in other markets. And also the V8 hybrid sports car is unveiled. And also the orders booking starts open. So the leading indicators to watch is always the balanced region growth. We expect that no single market makes up more than 40% of our sales in the steady status. So I think you can watch the milestones from the above mentioned models and also the market distribution.
I think, again, that it really lays out the pathway to achieving that goal, which is an ambitious goal, but I think it's achievable. The sports car business has historically had a very particular type of customer who's seeking performance and value with the vehicle and the styling, obviously, that Lotus brings to the table. As you've embraced some additional designs and, the new platforms with SUVs and sedans, some of the demographics of the customers you're targeting might be shifting a little bit. So I wonder if you could maybe address that and talk about how those new customers are coming to the Lotus brand and how you're marketing maybe to those customers.
So expanding beyond the pure sports cars have given us, two clear customer insights. The first, our car driving is growing with us, not leaving. So 80% of the EMEA sports car orders are from our loyal purist customers, and 30% of them actually also buy our Eletre SUVs or EMEA the GT as their daily driver. And also they wanted a Lotus they could drive every day. Second, we're also like reaching the entirely new high value demographics and customers, 10 or 15 years younger than our sports car average, and with women, making up a much higher proportion of these new buyers compared to our sports car. Plus, we have a 60% family households and 60%, conquest customers from other luxury brands who wanted the, authentic driving dynamics over the generic luxuries. So in short, we are not, diluting our Lotus DNA. We are evolving from a niche second car brand to a full line performance brand for every enthusiastic and also every life stage. So while keeping our core driver first DNA completely intact. So that's what we learned from the past 2 years, 3 years in experience in handling our new models.
Yeah, I think that's really well said. I agree. I think that's what you've seen with a lot of the other high-end luxury brands. They end up selling multiple vehicles into the same household. So it's good to hear that you're achieving that as well. We've talked about it a little bit, the Eletre X entering new markets, or for me, as it's being sold in China. If you've received any current, consumer feedback from the early deliveries, early market response, so what are you hearing about that vehicle and how people are embracing it?
We have been watching very closely to the past 2 months regarding the current status quo for the Eletre, the for me in China, of course, you call the Eletre in the Europe. I think the early customer feedback on the Eletre X is in line with our expectation. We took over like 1,000 orders in the first month in China alone, with 70% of the customers choosing the higher specific versions and 20% coming from the existing Lotus owners. And I think 3 things stood out as that, set it apart from our competitors. The first, it eliminates the performance EV pain points. And second, delivers the true Lotus performance. And third, customers tell us that it's a performance car that requires zero compromising among the daily usability, the track capability, and also brand and heritage, and also there's no range anxieties. So that's what the basic the feedback from our current customers.
It's great. Speaking of performance vehicles, you also discussed and announced that there's going to be a new Type 135 V8 hybrid supercar in the works. I know there's been a lot of speculation online, and some of the analysts, like myself, have been speculating what this car might look like. And I wonder if you could talk a little about where you see this car fitting in your product lineup. And do you think it has the potential of being a halo vehicle to draw more people into the brand?
Personally, I think what we call the Type 135, sits at the top of our product portfolio as our halo flagship, potentially at least. Above our EMEA sports car, above the EMEA GT, and also the Eletre SUV lines. Expectation to launch in 2028 is going to be the ultimate expression of our Lotus performance DNA. Over like 1,000 horsepower V8 hybrid supercar and built for the pure driver engagement. Now, this car, I think it feels a clear gap in the market today. I think so far we are still in the pre-research stage. So I wouldn't say we have a clear benchmark regarding the commentators, but my personal perception or understanding today could be the Ferrari 296 GTB and also the McLaren Artura. But I think the Type 135 will have a potential to deliver more extreme, lightweighting engineering and also more authentic driving feedback and also the sustained track performance. That's what I can tell you mostly from my personal perception instead of a company benchmark.
Right. Okay, well, that's great. And one of the challenges that you're going to face as a luxury provider is always trying to find that niche between high performance vehicles, which are higher price, and the more traditional vehicles that are going to be, the entry level to the brand. How do you balance that at Lotus, trying to have the right mix of products in the marketplace?
I think with the previous year's experience, I think I can tell you now is that this balance exactly what the focus till 2030 wants to build to solve. And now I think we have a pretty clear, deliberate and a non-compromising framework for it. For Lotus, it's not going to be a trade-off. It's a complementary 3-tier system that makes every line stronger. Firstly, the future Type 135, what we call can be the halo supercar for the portfolio. It's low volume, high margin, and it's our brand Beacon. And the second one about the Emira sports car. Currently, we are selling, and it's our core mid volume and mid margin business that protects, and celebrates our pure, drivers' DNAs. And of course, the last but not the least, for lifestyle SUVs and the GT lines, they deliver the steady and scalable volume and cash flows that can fund us, for the supercar and the sports car development. They bring the new customer in our Lotus families. So I would say they reinforce each other, and our 30,000 unit steady state target is exactly this balance. So that means enough volume for the financial stability, and also enough restraint to never dilute our luxury performance for the whole brand.
You just announced that UK performance hub where you're going to be utilizing the Hethel location as your operations for performance business. Can you talk anything about that or what drove that decision?
Actually, we are based in Hethel. It's going to be a very important hub for our performance car. Currently, they are the manufacturing center, also the research center for our, sports cars, even including this, Type 135. I think we already tell the public the put option is underway, and we are also making the synergies between the UK and China. So I think that we are still in the originally proposed timeline. We are going to finish in this year. We can realize the synergies between the two companies from all angles, not only the research but also the supply chain, logistic, whatever. That's the reason why we think the UK remains the most important hub for us to keep our brand heritage and even for the Lotus engineering, this kind of things. So I think the UK is going to be indispensable and important part of the future operations of the whole company. Regarding timeline, also the measures regarding this acquisition, I think you can always wait for our earnings release and the public information.
Good. I think along those lines, we've talked about the path to profitability, which is another key focus of investors. What specific measures as a CFO are you trying to implement to increase your gross margins and improve the operating efficiencies at Lotus?
I think we have at least four concrete levers, to drive the margin expansion and also improve the operational efficiencies. And of course, this kind of reflected in our Focus 2030 strategy. The first regarding about the product mix optimization. And we expect that the hybrid models to deliver higher gross margin than the pure EVs. And the second, it's about the scale leverage. When you mentioned 30,000 units, steady state volume fully amortizes our fixed R&Ds and also the tooling costs. And also the third one about the operational integration. I just mentioned we are actually completing this full integration of the Lotus UK and the Lotus Tech this year. So that means we can eliminate redundant overhead and also the streamlining the governance of the companies. And fourth, supply chain synergies. We can leverage GD's global scale so that we can target decent component cost reductions across the full lineups of our products by 2028 and of course beyond.
You sit in sort of an interesting spot inside the Chinese auto market as a luxury brand with European heritage, with most of your manufacturing currently based in China. And as the market is adjusting a little bit in China, where some of the domestic brands are sort of moving up market, and there's been a little bit of price resistance against some of the existing legacy European brands, sort of how is Lotus perceived in the Chinese market today?
Well, very good point. Actually, this dynamic is our competitive advantage in China. I think it's far beyond a challenge. Of course, it's a challenge, but I think we take it as our unique position because I think we are kind of uniquely in a position as the only brand in this market that has both, characters. One is about we have over 70 years, European performance heritage and also the global, luxury brand legacies that I think no other, domestic Chinese brand can replicate, at least, in the near term. And the second one is we have the full Chinese native, manufacturing and the supply chain and technology capabilities backed by the GD mostly. And I think we can iterate the faster and price more competitively and shorten the, time to market for our products. So that's the kind of, comparative advantage we can gain from the current competitive landscape in China. And in short, the foreign legacy brands, they like the local speed, but the domestic brand, they like the performance heritage. And fortunately, we have both. Yeah.
All right. It's a good position to be in. We haven't had a chance to talk much about the relationship with Geely. How do you see that playing out going forward? And where do you see the ability to create some shareholder value through deeper integration with Geely, be it in manufacturing or supply chain or technology sharing?
I was asked, many times regarding this question. My understanding is, the relationship between GD and Lotus is kind of two-way beneficial. But of course, from the shareholder, the value opportunity point of view, I think the biggest value is going to come from the supply chain at cost synergies and the GD's global scale delivers a much lower components cost, I just mentioned. And also we get access to the industry leading and hybrid R&Ds without duplicating billions of investments. Plus, we can share with them, the manufacturing capacities that eliminates the fixed cost risk. All in all, I think the collaboration and the synergies between the two groups are kind of all aspects.
Great. Lotus fans love to talk about the history. They love to cite the Colin Chapman's famous quote to simplify and then add lightness. You're building very, very complicated machines today, though. So simplifying them is a challenge. And now also you're building them with very heavy battery packs. So how do you navigate that today in today's world where people want a simplified light vehicle, but it's also a mobile computer that has a very large battery pack?
That's another question, I've been asked many times. And I think like my understanding is, Chapman's philosophy has never been just about cutting weight. It's about the prioritization. We use the carbon fiber and advanced materials to offset the battery weight in the EVs and also the hybrids. But I think more importantly, we simplify the driver experience. We cut out the unnecessary gimmicks, and also we remove a lot of the distracting technologies. Currently popular kind of in China, and also we only add features that really improves the driving feedbacks. So I think that's something like differentiate us, a lot from the peers. That's what originally Colin Chapman, in essence, what he is proposing. I think we do not build the mobile living rooms. We build the driver's cars. And that's the way we honor Chapman today and as always.
That's well said. Um, what do you think investors and consumers might be missing about the Lotus story today? Like, if you want to tell them where Lotus is going to be in 5 years, what would you tell them?
I think we try to answer this question in our, Focus 2030 also. The first one, of course, in order to cater to the needs of the clients, the customers, we have this kind of what we call the full powertrain portfolio. And that's what we say, okay, we change because the time change, the market evolves. But something will never change. What makes Lotus a Lotus is about always our philosophy regarding the engineering, the driver engagement, the lightweight, the aerodynamics. So this is something like we never change. So we want to tell the investors and the drivers, our clients, well, of course, we do change, get, adapted to the current market, but we never change. It's what our makes a Lotus car. I think you can see this from our previous Lotus car, and you can see this also in our Lotus car we are going to make in the future. So that's what I really want them to know. We never compromise, on these
Right.
points.
Yeah. I would encourage everyone to go out and find a Lotus. There are dealers here in the US. Go see the Amira. They're a beautiful, beautiful car. And I'm hoping that there'll be an opportunity this summer. I'm going to head up to Canada where I can actually drive an Eletre. I know there've already been some shipments to Toronto to the dealers in Canada. So I'm hoping to go make that a trip. And then I can report back to investors on how the vehicle is to actually sit in the driver's seat. So looking forward to that. Thank you, Dr. Wang. I think this has been incredibly informative. It's been a really good conversation about where the company sits today and where it's going to be over the next, 5 years. I'd like to continue these conversations. I think it's really helpful for investors to sort of see and hear what's going on in the company. It's at an interesting time in the company's evolution. Despite having been around for 70 years, it really, in a lot of ways, has a feel of a new startup in some ways. So I would encourage all investors, if you've not had the opportunity to read some of my research, reach out to me directly or visit the Zacks Small Cap Research website, and you'll be able to get access to that or shoot me an email directly. So with that, thank you very much, Dr. Wang, and thank you everyone for watching and tuning in.
I look forward to that day, and whenever I have a chance, I'll be there also. Thank you so much.